Greetings traders and welcome to Exness Talks, your go-to source for the latest analysis and ideas from markets, plus tips for trading and more. Hello traders and welcome to the latest analytical podcast from Exness Talks. Joining us as usual, we have Stanislav Bernikov to give us his valuable insights. Thank you very much, Stan, for being here with us today.
Hello everyone, thanks Michael for having me today.
And the first question that many traders are probably thinking about since last week is what's going on with crypto? Do you think, Stan, you could give us a brief summary of some of the latest key developments for Bitcoin and, if you like, Ethereum?
Bitcoin had continued going down. That's we obviously see from the charts, as well as Ethereum, as well as all other cryptos. And it has no meaningful support on 35, 40,000. So we've seen it plummeting very, very severely below 35,000. Now it consolidates around 35,000. Well, usually it's associated with what? With regulations which comes from Chinese government. So they try to ban some companies, or they already banned some companies which provide crypto-related services. That's what we see. But I think most important event that happens that some investors, some institutional money starts to flow out of the cryptos and get into gold, back to gold. It's like, the old-fashioned asset becomes more interesting right now for institutional investors. That's what we're talking about in previous podcasts. Now we see it evolving and developing. This trend starts to go on. And yesterday, Goldman Sachs published an article which actually gave this insight that gold becomes more interesting for institutional investors rather than cryptos. Possibly that's what we see now. The institutional part is going out, but maybe that's a public opinion which we see in media. So we don't know yet what exactly is happening. But we see this boom and bust cycle for Bitcoin. Now it's obviously in the bust cycle. That's a norm, I would say, because it performs like any other commodity. If you take a look at the historical graph of gold, for example, or crude oil, or any other commodity like natural gas, you see these boom and bust cycles, which happen all the time. And the volatility may be really tremendous, depending on the liquidity, depending on the commodity itself. So Bitcoin is not the exclusion. So it acts just like any other commodity, but with the accelerated mode, I would say.
Mm-hmm. And you mentioned that there seems to be an outflow of liquidity from Bitcoin, or an outflow of investment and involvement, let's say, from Bitcoin towards gold. Do you think that there's a prospect of this continuing for some time, or do you think that this is something that's going to be more limited?
Well, I think so, because there are no other alternatives rather than gold right now. If we take a look at across the board, well, there are metals like silver, copper, platinum, palladium, but they are not perceived as storage of value for institutional money. So talking of institutional money, they prefer to flow inside of some assets like gold, and there is really no alternatives. Stocks, they are not performing too good, actually. Nasdaq had rebounded on Wednesday, but it is quite volatile, and it's quite questionable whether it's a good idea now to invest in technological stocks. They certainly are not protection against inflation right now.
Mm-hmm. Okay. And we also mentioned very briefly regulation when we were talking about Bitcoin earlier. And for many crypto traders, sentiment has kind of been driven by tightening regulation in India and in Turkey, and of course, most recently in China. Do you think that this has the prospect for affecting crypto markets in the long term in the way that regulation to some extent did in 2017 and 2018? Or do you think it's something that is possibly just going to disappear from the immediate radar of traders?
I don't think that's a main driving force for Bitcoin right now, because regulation issues, they were taking place sometime in the past, but when the sentiment was optimistic, we see that market kind of ignored that. Because if the institutional money flows in, so there is no sense in regulation, nobody can actually prevent that from happening. But what we see now, that sentiment turned to negative, and the market reacts on news which would be ignored in the past, but now they are perceived as negative. So, okay, regulation, we are falling down. Okay, Elon Musk tweeted, we are falling down. That's what, by the way, how negative sentiment works. So the market takes any event or any piece of the news from the media and reacts negatively. So that's how negative sentiment works. When the situation will change, it will act oppositely. So negative news will possibly be ignored, while positive news will lead to their growth. That's what's happening, I think. So as for the crypto industry itself, we will see what will happen in the future. Now there are no, I think, big shifts in the situation. So possibly that's margin calls. What we've seen last week, it's margin calls because there were lots of margin money, I would say, involved in speculation for Bitcoin, and they were liquidated sharply, as we've seen this dropping below 30,000. Now it has some demand below this level. So let's see how it goes. But I see that from a technical standpoint, that's not a very good view. So because it hasn't shown any support just yet. So I will not be surprised if it plummets below 30,000 to 25 maybe. And this will be, I believe, a good point for investors which would like to flow into Bitcoin and to sit in the Bitcoin for some long-term period of time. But at the same time, we've seen the behavior of Bitcoin in 2018 when it plummeted below. So it has taken some time to recover. It has taken, I believe, 2 years for Bitcoin to really recover and to setting new highs. So if you want to enter the Bitcoin for long term, it's really got to be long term. So don't expect it to rise quickly this time. Well, it may rise quickly, but nobody knows. So it's a long term game.
Mm-hmm. Okay. Thank you very much, Stan, for these insights and for joining us.
Thank you, Michael.
And
See
thank
you
you to
later.
all of those who have been watching and listening. And we wish you successful, responsible trading.